Hey you guys, how's it going? My name's Jeff. Welcome to the channel, and if you've been here before, welcome back. Today I just wanted to make a little video to update my small company stock portfolio. If you're new here, I just started investing about 1 month ago in small company stocks, and I made a portfolio of 10 stocks, and in this channel I'm going to just share with you how this portfolio does so that you can track it and just sort of see what I'm doing and learn something from it in real time. This is not investing advice. Small cap investing is new to me, okay? I've mostly been investing in large cap companies, so companies like Amazon and Berkshire Hathaway, companies like Apple, Microsoft, even Nvidia. But I haven't taken the time to really learn about some of these companies that I'd never heard of before. But my idea here is get them when they're small. You know, I feel like if I can get a company that's just a $5 billion company, there's a better chance that company will grow faster and perhaps become a $10 billion company than if I invest in a huge company like Apple or Amazon. The chances that they're going to double in size seems to me like it would take a much longer time. So along with this kind of greater possible return comes a lot more risk, and I have definitely discovered that since I started investing about a month ago. Some of my early positions have been, and these are 10 stocks, and I will list them all for you in the description below so you can see them, but Rivian has been the one that's fluctuated the most in stock price. Doesn't mean the company's getting worse or better in the last month, but the stock price has really fluctuated mostly on the downside. I first bought it around $23, I think, and change, and within the week it was down to 18, so I bought more. So one thing that I've really noticed about small company stocks is that they fluctuate a lot. And of course, when they go up in value, it never bothers you, but when you see your stock like Rivian went down about 20 or 30% after I started investing, it does kind of test you as an investor. It makes you wonder, did I make a bad choice? Is this a mistake? What I did with Rivian was when it came down from like $23 where I initially purchased down to 18 and change, I bought some more shares. And it continued going down, and I didn't have a lot of extra cash at that point to put into buying more stock, so I just did nothing. But what I've noticed is yesterday, Rivian, which most of you already know about it, but they make EV trucks, like pickup trucks, and they also make delivery vehicles. Yesterday, Rivian stock just jumped up about 5%, and so did a trucking company called Saia. Had a really good day yesterday. And then I looked again today, and Rivian is up 4.9%, so basically a 5% gain just today. And Saia is also up today. And then some of the other stocks in this 10 stock portfolio are up a lot. Globant is up 4.79%. And looking over here, Rivian I mentioned was 4.9. Trex is 4.26. And Toll Brothers is 4.0. So what I'm seeing really is that just having the patience to stick with it and not be thrown too much when the market goes down and just stick with the plan. And my plan is to just hold these stocks and I don't have a choice because I'm not a trader. So I'm just going to hold these stocks over the next year at least. But I'm hoping to hold these for maybe 3 years, 5 years and beyond, and kind of watch it, and also watch the companies, not the stock price, but learn more about the companies and what they're doing. And my thinking is that if they are increasing their earnings from year to year, then the stock price is probably also going to go up. It tends to follow. Stock price tends to follow increases in earnings. So as the earnings for certain stocks go up, I'm going to notice it because I only own 10 stocks. And that's the beauty of a concentrated portfolio like this, is that, you know, you're not trying to track 30 or 40 or 50 stocks in all these different sectors. I've just chosen 10 stocks in companies that I understand. And so as you notice these companies growing, that will make me more aware of what's going on, and I might be wanting to buy more shares of them. And by the same token, if some of these companies do poorly and their earnings are either flat or they are declining, I'll see that in the stock price, and then I can either decide to not buy anymore in the future, or I can sell those positions. I'm not gonna let myself sell them too soon. I think just 3 months, 6 months is too short a time frame, but you know, after a year or so, I'll have a better idea of how the company's doing. And I think if you just think of yourself as an owner in these companies, it's a better mindset than somebody who's buying stocks and trying to sell them when they appreciate a certain amount. Of course, that's because I'm more of a buy and hold investor. And if you talk to a trader, they would say I'm crazy because you have to get in and you have to have an exit strategy. But I'm not an investor who has exit strategies. I just think that's too hard to time the market and to time price movements of stocks. So if you're interested in investing and you haven't yet subscribed, please hit the subscribe button and the notification bell. And that way you'll be able to follow along in my investing journey, and hopefully you can learn something that will be useful to you as well. And if you are a new subscriber, please just write in the comment section, "I subscribed." Just those 2 words will be really helpful. I really like knowing about you guys when you join the channel. And if you want to, just say something about how you like to invest, because I like to learn about what all of you guys are thinking about and doing. So thanks so much for watching this video. I'm so glad you joined, and I look forward to seeing you in the next video.